What's happening, guys? We've got a Sunday scan coming at you for February 22nd. Crazy week last week. It was only 4 days, and I mean, it was on pace with the rest of the weeks. February is already better than January. January was better than 2020. So if we're on this pace, I mean, by December, it's going to be a pretty crazy year. I hope it doesn't stop. This is an amazing market, like we've been talking about, embracing the chase. You know, it is what it is. You just got to roll with the punches, roll with what's happening in this current market environment. And that is, you know, things are going nuts. And there is still huge short opportunities. Huge. But you have to be patient. And that's why I wore this shirt today, is because bet heavy, bet last, right? And we talked about the importance of this, but it shined through on Friday with VCNX. So VCNX was a big short squeezer. And it reminded me of CATB. And I'll compare those two charts. I'll show you guys, you know, you can see the similarities between CATB, the exact almost price range, how high it went, how it squeezed out, and then how it unwound throughout the day. And then literally the carbon copy trade on VCNX. So the most important part was not pre-exhausting. A lot of people pre-exhausted into the front side of the move. They don't want to miss the backside. You don't want to miss your entry. But what if you did and you picked up the pieces after? And that's what I was trying to push and say and discuss in the room. Hands off. Don't try to find the top. For me, I like to get in there with some. You know, I'll go for a ride on some. I shorted a little bit. Starter, feeler position, because I need to get involved. I need to get in there. I need to kind of get a feel for what's going on. If I'm not in the name, I don't get that same read. So because of that, I just watched it. Each time that it started to kind of pull back, I reminded people, there's no reason to try to find the top. I'd rather be 30, 40, 50 cents late than $2, $3, $4 too early. Same thing as, you know, dip buyers becoming pop sellers, post-exhaustion style of move. What does that mean? I am looking for the move up, the squeeze. I'm not interested in just nailing the top or this first pullback. I want it to come back up, test, pull back, come back up, test, pull back, and you'll notice it starts to find a base. I want that base to now become resistance. That, to me, is that post-exhaustion move. And as I said, when that huge stuff move happened at 9, there was like 3 newsletters at once that all came long trying to squeeze it out, and I think it went to 940. And that same candle that it hit 940, it was trading at 830, right? So it just squeezed everybody out, huge exit, absolutely slammed down. So at that point, you know that somebody exited a huge amount of shares. The short squeeze came in, the long side exited into that short squeeze, and then they pulled the support. And it's not necessarily that they pulled the support as in the longs did. It's because all those folks that were on the bid, you know, trying to, all right, I'm going to cover here. Nah, I'll cover here. You know what? I'm going to cover here. I'll chase it up. All right, fine. Market cover, right? That's that exhaustion move. That's that parabolic move. And all of those bids that were kind of chasing it up on the bid side and adding fuel to the fire, now went to the offer. So now they're not there. And it absolutely pulls back. That's what I want to wait for. Because like I said, I don't want to be $2, $3, $4 too early. I'd rather be 20, 30, 50 cents late and capture that full downside. And that's exactly what happened. We were fortunate to be able to capture that spot on call on the room, and you know, relating it to the CATB example, I think was really eye-opening for a lot of traders. Where have you seen this setup before? The hardest part about trading is kind of trusting and letting things play out, right? Being patient. But if you can relate it to things that you've seen before, you know, it makes it a lot easier and gives you a little bit more confidence to let that trade work. So this one ended up working very, very nicely. You know, you have to be cautious, and there's a reason why when I share my ideas, I post them a certain way. I kind of post the big picture idea, what I'm looking to do, key levels, and my thought process throughout the day. And the reason that I post those is because there are people hunting out shorts in this day and age, right? They want to know when a particular bias comes in. And if they can use that, these algos, these traders, whomever may or may not be behind these particular names, they can use that information against you. So that's why, just like if you're playing poker, do you play with your cards like this or like this, right? You never show your full hand. You always keep it private. And I think that is important. You never want to be too aggressive on one side. And that is why if you read what I write and it makes sense to you, maybe, a trader or two takes the trade. If you don't get it and it doesn't make sense to you, you're not in the trade, which is perfect because you shouldn't be. There's too many people that just are looking to mimic somebody else's trades. But the fact is if you don't understand the why, you're not going to trade it. And that's exactly the point for traders. Traders should not be in something that they don't understand. So never show your full hands, and just be aware that things are lasting longer than they ever have before. But in the end, they all end up doing the same thing. It's just about being patient and not underestimating how far things can pull back after. Just like you saw on Riot and a few others, you just have to wait for that crowd, that excitement, that bias to shift, and they'll unwind further than you think. Doesn't mean they won't come right back. Riot did. But there's going to be that highly probable trade, A-plus setup, 90-95% probability, and they're happening left and right every single day. I just want to take advantage of those and move on. I don't care where it's at in a month. I don't care where it's at next year. There's a setup. I'm a trader. I look to take advantage of that setup and move on. This next segment was kind of actually hard to think about how to go over it. I think it's going to be pretty short because I just don't even know how to say it without coming across as a jerk or, appearing arrogant or as if like it's an I told you so, right? But that's the only way that I can kind of try to get this point across. I have never received so many negative replies. I thought Clove was bad. CLOV. I had warned at 17. And I mean, the name calling and everything, it's just like this new social media way is silly. I let the stocks do the talking. I don't come back and say, I told you so. But just to prove this kind of point that I'm making, and then I'm going to move on, GME and AMC are now 70-80% lower. CLOV was 17, it's now mid-10s. SNDL fell 70-80%. SPAQ, which is now FSR, went from 18 to 9 on a similar warning. NKLA, you guys all know what happened with that. And CCIV, it is what it is. The stock ran 600%. If you don't think that a pullback is near, if you don't think that a correction is due, if you don't think that it's crowded to one side, I don't know what to tell you. The amount of sheep on this name, I've never seen it at such a level before. And the reason why I call those people sheep is because somebody posted a doctored, photoshopped image to rally the troops and create this negative, just about hate, right? But anybody that's interacted, anybody that has replied is just auto block, right? Nobody gets a spot in your head space unless they're paying rent. Well, fortunately, they did pay rent because it was a nice trade opportunity on Friday. However, just so you know, if you engage or post anything just silly, I don't have tolerance for it. So, All I'm trying to do here is give you the proof. GME, AMC, CLOV, SPAQ, NKLA, SNDL is the proof. Everybody that acted in the same way as people acted on Friday on CCIV, on all those other names, now understand why I was warning. So I'm not one to say I told you so, but if you look at the proof, if you look at the past, the stocks do the talking themselves. So I wish everybody the best. I hope that everybody banks. I hope that CCIV continues to go higher for you. But I also know that you will look back on some of your replies and realize how immature you were. And that's all I'm going to say, because it was laughable, to say the least. But this week, I don't have a ton of main watches that are like, this is the one I want. And that happens sometimes. Sometimes you come into Monday and you've got, 2 or 3, like, all right, these are the ones that I'm going to focus on. And this week, I definitely have a few that I like, but I think that it's going to be that Monday. We've got that FOMO. Everybody's coming to the market on Monday excited. We're going to have a ton of people chasing stuff pre-market, and those are going to be the key opportunities. But the ones that are on scan, typically I look for post-open, 9:45, 10 a.m., and those are the ones that you can be a little bit more patient with, bigger picture. Let them work while you're trading other things. And so that's going to be my goal for those. I posted that, just one other thought. I think that it's important, and I always say this over and over. Obviously we're in an industry that 90% of traders fail. And right now it's my belief that 90% are actually making money. And I just want you guys to remember that. I always say it always comes down to process. Some of the replies, when I post these kind of things, they're like, yeah, you've been saying that for, 6 months, whatever. Yeah. And CLOV, SNDL, all these different names, GME, AMC, those are the ones that are going to break your account. It's all about risk management. It's all about having a process that's going to keep you here in the long term. If you don't have one, you will only be a product of a bull market, and as soon as it's done, so will your career as a trader. So I know that nobody thinks that they need to have any of that right now because it's working, but I promise you, you will. And people get it. People understand. And if you don't yet, you will. And that's fine. Sometimes it takes people longer than others. So I just hope the best for everybody. But I would really, really encourage you to, I did a recent interview with somebody, and I asked them, what is your best setups, right? So that's typically, what I ask people. What's your process? What's your top 2 setups? If you can't answer that question quickly, then you need to focus on answering that question quickly. If you jumped in an elevator and somebody said, oh, you're a day trader. Oh, so, what are your top 2 setups? The faster you can answer that, the better process you have. Otherwise, how do you do this long term? So that's just my 2 cents. It doesn't mean you can't make money right now. There's lots of money flying around left and right. But I'm talking about a career trader, not a bull market product of a COVID type work at home market. And again, I think we're in the third, maybe the bottom of the third now, but I think we're in the 3rd inning. It's still early. I think that there's going to be an unreal amount of opportunity still. I am probably 60, 70% long side, but my conviction and my size comes on the short side. So although I am scattered across on a lot of long names and trading a lot on the long side, My conviction in size comes from opportunities like VCNX on Friday, Riot when it had that parabolic move. And just because I went short on Riot on Thursday does not mean long-term I don't think it can go, or long-term I think it's going to pull back. It is a setup that I'm familiar with. It is my gap up, parabolic, overextension, or failed follow-through type setup. It is something that I'm familiar with. It is something that I wait for, and when it sets up, I will trade it. It's set up on Riot last week. It's set up on CCIV, and hopefully we get opportunity on CAN, C-A-N, as well as a few others this week. However, it's a trade. Doesn't mean long-term, I think, one way or the other. Winners this week on the t-shirts. Roberto Garcia. Oh, man. Abdullah Ahmed. I think I got it. Brandon Hannah. Giving away 3 shirts. So email me, webmaster@investorsunderground.com, and hopefully we can ship those out this week quickly. Everybody else that is part of IU, we are shipping out a lot of shirts. Everybody that answered the survey has obviously been has the opportunity to receive the shirts, and so thank you guys for participating. And let's get right into scan. All right, guys, let's get right into it. First and foremost, disclaimer is always below. Read and review it. These are my ideas. These are not buy or sell recommendations. This is not investment advice. This is for educational and informational purposes only. So if you are not in agreement, just click the X button. If you want to learn, if you want to get, kind of a good feel as far as, what I find works for me, then carry on. VCNX is a perfect example of, where have I seen this before? And we had a great opportunity here. This is sort of the difference in the market right now. So in this particular case, there was newsletter after newsletter after newsletter. They were all, pushing it, going long, exit, long, exit, long, exit. And when you create that much volume, you're creating, this long side, these shorts trying, longs again, squeeze them out, getting stuck, you name it. And all that does is just churn the volume. Churn. So you start to get these moves that might, go further than you would expect. So it brings out some great points here. And, anybody that's in IU, I would suggest going back to the chat logs and kind of reviewing how it went down. For me, I like to start in a little bit. And, I don't mind going for a ride on a small, portion. But in a situation like this, I need to be in there to get a feel for the trade. And, in this particular case, I started in short, just to dabble. And like I told everybody, here's the key level. Key level never broke. Next level, started to base. Here's the key level. Key level never broke. Next level, started to squeeze out. Finally got a situation where we got an exhaustion move over the 9s. There was about 3 newsletters that all went long at the same time and absolutely murdered everybody that followed them. They got long at the 9. They were trying to, squeeze out anybody that was short biased, and they had it coming for them. And that's why, look, if you're gonna chase these moves and not really have a strategy and just try to use influence to get yourself out of or create a squeeze, at some point it's gonna catch up. And unfortunately for them, they got it handed to them. And a lot of them came in for this squeeze right here over 9, and then immediately it's down $1. So there's a couple key takeaways, I think, on this particular trade setup that I think will help you with kind of identifying a situation like this, but also, how do you prevent from getting bent on the front side? So the first couple takeaways. One is, you've got the pre-market trap, and we've seen this time and time again where you've got that morning move, it starts to pull back, it goes under VWAP, so this yellow line is obviously the VWAP level, goes under that level, starts to churn around it, and then grinds up from there. So without that morning move and that fail, there's no real reason to fade it, right? If it was just kind of slowly going up, nobody would care. But the fact that it's gone up and then starts to fade, now people are probably interested in shorting the pops. So there was a couple opportunities to trade it pre-market. But as you guys know, in this current market, I like to separate, unless I'm really nicely on the right side of a trade by a couple bucks or something like that, I like to separate my pre-market trades from my regular market trades. Pre-market trades being the 4, not that I'm getting up at 4 a.m. anymore, but the 4 a.m. to 9:30s and then the 9:30s to 4 is kind of how I would separate those trades. So the way you learn a lot off the first candle, right? The first couple candles. And I try not to trade between 9:30 9:32 unless I see a great opportunity. So we had a nice big stuff move, and I dabbled in a little bit just to kind of get a feel for how things were going. They ended up trapping, ended up squeezing. And so it started to go. For me, and again, if you're in IU, I would suggest to review the chat log. I was like, do not step in front, wait for failed follow through momentum. Here's the key level. Unless that starts to fail, avoid. And we talked about it, and it was 720s, right? So 720s kept on coming, and they kept on soaking and soaking and soaking and soaking at 720s. So you can see here, we talk about the wicks, but pulls back, comes back, pulls back, comes back, pulls back, comes back. These are the wicks we talk about. This is the trap. A lot of people get confident because they see this seller in this 820 to 830 level. But what happens is people start to get confident and they start, okay, 830 is the top. So I'm just going to short pops first at 830 level. Well, what happens if they decide to pull that 830 seller? Squeezes out. So we saw this on GTech a couple days ago, GTEC pre-market, where I think it was 23 bucks, and it was a hidden seller. What do I mean by hidden seller? Showing 100 shares or 500 shares, and they're selling thousands and thousands and thousands, right? And you could call it iceberg, whatever you want, but they're not showing their full hand. So people start to get confident, okay, there's a sizable seller here, so I'm going to start to short against this level. They're not dumb either. So then they pull that level for a couple minutes, and then everybody freaks out that was shorting against that level because you've got proof that there has been a seller here. All of a sudden they're gone. Everybody freaks out and covers. That's their liquidity event. And then they come back and start selling again. And so we had the same situation here. And you can see that the seller actually came back right at the same level. Just about maybe, 20 minutes later or so. So they let everybody get confidently short while they supported the 720. So they're probably selling, support. They squeeze through that level. They exhaust everybody out. That's exactly what I look for. Then I also look for the social sentiment. What are other people doing? And we had literally like a handful of newsletters all going long at the same time. So we had that exhaustion candle. We had that stuff move. So we literally went from 940 to 840 immediately. So right away, everybody that bought that breakout is now down a buck a share. And we're right back to this prior seller that was in there in the tape from prior breakout. So that to me says that was a real seller that I saw. That was the squeeze move. And now they're back. And now all of these people that bought above this are on the wrong side. So what does that remind you of? When dip buyers become pop sellers. So now you can see pop sellers, they're no longer buying the dip. They're selling all the pops. Lower high, pop seller, lower high, pop seller, and continues to fade on. So that is a perfect example of when dip buyers become pop sellers. Post-exhaustion. You don't want to be in there pre-exhaustion. I'd rather short lower than try to find the top. It's very important in this market. Because of that, we had such a great opportunity to be able to size, and the confidence came because the amount of retail traders that were on the wrong side, they were led into buying that breakout. And because there are so many people that just want to be told what to do, you can safely assume that a lot of people bought 920, 950 and got smoked. And that's the kind of action that you want to see if you're anticipating or betting on the other side. So again, that is the reason why I wore the shirt tonight is, bet heavy, but bet last. And I'd rather be heavy after all this stuff happens than heavy on the front side. Because if you're heavy on the front side, you're part of the problem and you're going to get squeezed out. So what do I think about for tomorrow? These are always tough. Typically I would say I'd want a nice little gap up, ideally 530s, maybe it exhaust out to 550s. Squeeze anybody that didn't cover yet out and then start to fade and have some failed follow through. My opinion is it gaps down. And if it does gap down, I potentially would still join that trend. But I am hopeful that there was no real reason to cover on Friday. So I'm hopeful that maybe it tests a couple people's conviction on the short side. And if it starts to hold trend, maybe it squeezes them out and then a possible opportunity. Just one last tidbit here, looking left, you can see this prior base becomes resistance. And again, this prior base pretty much becomes resistance over here. And again, all failed follow through, this prior base becomes resistance. Just trying to give you little tidbits that could potentially help you with entries and kind of anticipating trend. Can monster move. Can last week I said that it reminded me of BTBT. This is BTBT. This was the move. It was 9 and then 10, 15. And so, again, just like VCNX and CATV, where have I seen this before? So, just like I tweeted, just like I said, I felt like CAN was setting up just like that. I also feel like MOGO is setting up that way. I also feel like EBON is setting up that way. So if Bitcoin continues to head higher, if these names continue to trend, MARA, RIOT, as well as all the other ones that are in the sector, I want to watch MOGO and EBON to outperform, right? So if you look at all the names in the sector, which one outperformed? CAN did, CAN did. So that's why I try to identify the setups that potentially will outperform versus their peers. And, that's why I was interested in that one. I've got it on scan for tomorrow. I don't have a strong conviction either way. I would treat it like Riot. I would treat it like, the rest where it's going to be hard for me to just join trends tomorrow if it looks like it's going to break out. I probably would just let it, do its thing. And if it starts to break out and go parabolic, I'm interested in looking for the short side. If we consolidate and everything starts to, Bitcoin starts to go, 60,000, 70,000, then obviously I'd be trading that for, $30 and $35 or something like that. But if we have some type of pullback in the crypto names, then I'm going to be, focused there. VUCI, you can see it snuck up after hours. I think they had a PR. I did not confirm that. I guess I could do that now. Yeah, I think they had it after hours, a PR, but they also had Kathy Wood's bot. So I think, the PR doesn't really matter, I don't think. It's more along the lines of people buying and mimicking whatever Kathy Woods does, or Kathy Wood. So I think we're going to have a nice opportunity here. It's going to be a pretty big move. This is a breakout on the chart, and as you can see, it's over 20 after hours. So ideally, we get some type of exhaustion, 20, 25 type parabolic. That's the goal. Maybe 2022, and then pulls back to 1920. That would be an ideal move for me. That would be something that I would love to trade. CCIV, more headlines this weekend. So, this is a perfect example of, what happens when the crowd ends up being on the wrong side of the trade. You can also see there's just so many key takeaways here. You can see that, this has been the base, right, for quite some time, as well as right here. So you can see from Friday that, what do we talk about? We talk about dip buyers become pop sellers. If you just draw a line, I mean, it's not rocket science, okay? And that's why I have trouble, with all these people that, leave comments that have been trading for like 4 days. You can see failed follow through, failed follow through, failed follow through. Literally every pop is met with, failed follow through momentum. And it's up against this base, right? And so we talk about this all the time where, let's see this prior base right over here become, the top pop sellers are starting, the dip buyers are starting to be pop sellers. We start to come and test that prior support. What happens when it breaks the key level of support? All the stop losses are triggered. Okay, so there is no reason for anybody to be thinking about selling because the past 3 weekends, everybody's bought, and it's worked out because it just keeps on going higher. Nobody thinks about the other side because all they care about is price. That's their right or wrong answer, right? I'm right because it's higher. I'm a good investor because it's higher. That is the current market for you. So when you look at the technicals, when you look at what happened, I mean, it was just a perfect situation, perfect opportunity. And we've seen this a couple times. We had, it actually happened this day right over here. And I think it happened a little bit earlier too. I think it was this day and maybe this day and then one other time. But nice rug pull opportunity. And I think we're going to have some great trades on it. The only thing, like I said on Friday is, I'd love to size up even more on trades like these, but, just in case there is a headline, I think they said Tuesday, right? Over the weekend, but just in case it happens Monday or if it's postponed, whatever the case may be, you see what your risk is, right? That could be to the upside or the downside. So for me, there was the tape told the story on Friday. You either ignored it and you were angry, or you learned and you saw that there was a VWAP seller throughout the day, and then the stop losses got hit, the support got pulled, and you had a great trade. But that I was pretty confident about, but there was still that in the back of my mind, the what if, and just like I said on the scan. What if, there's a headline that hits? So that is the risk here. And, although, there might be a great trade setting up, I don't know that I would be as aggressive as, other days until we get some type of definitive. The next section of scan is failed follow through. So this is, Watt is always a great trader. And, shorts got, completely run over into the close. Great opportunity throughout the day, but again, supply, demand. If too many people are buying and it runs out of supply and there's more shorts, but there's still demand, that's what happens. And so they literally exhausted out all the shorts into the close. Looking left could have helped you. You can see pretty much went right back up to that window. Anytime that I'm trading in this current market environment, I kind of have like a window of where I'd like to get short or where I'd like to cover. You can't just use one stop or one level. You got to think about, I would ideally like to get short in this range, and you start in and you scale as the trade progresses. But in this case, you guys saw I had posted the trade, and I can do that as well again. But the trade at the close, I shorted into that window, that area that I wanted to, but I said, you know what, I'm done trading for the day. So it did fade after hours. That's notable. It's probably going to have a week open, but if I was going to be trading it again on Monday, which ideally I will, hopefully we have some type of pop up towards mid 6s, towards 7. I would love to fade it into this window, this basically 650 to 7 range. And as it fails to follow through, I would progressively scale from there. But we'll see. I feel like if you look at the volume, I feel like a lot of people got squeezed out into the close. And it probably have a weak open. So we'll see. If it gaps down 50 cents, that doesn't take it off my radar. I still want to watch it. UAVS has been a great trader. Got the full unwind. Actually, not the full unwind. I got a good portion of the unwind from the 13s. I covered way too early. But I got a good portion of the bounce from the low 8s to the 9s. And then obviously we had the gap up, shorted the gap. And that was a nice trade on Friday. Right now you can see that there's a little bit of consolidation. We're pretty much stuck in this level. So for me, I don't really see an opportunity unless, you know, we're breaking out of either one of these directions. So over 1040s or under 960s. So I would set the price alerts that we have in IU. You know, I'd set those 2 price alerts. I think that if it were to, you know, rip up pretty quickly, I think I would react versus this level. Again, we talk about looking left. If you just drew a couple lines, you'll see why. And, you know, I could post that chart as well from the trade on a Friday, but you'll see why I shorted into that level. And always look left. It will help you with proper entries. USWS. Shorted this the last 2 days. Ideally, we get a little bit of wiggle room back up there towards the prior VWAP level. I would use 240s as a guide. I do see this just kind of coming right back in. It was a bit of a pump push. It got a little momentum, squeezed out a few people, you know, because of action after hours. It did some crazy stuff. You can see here, it was in the non-regular trading hours, but rather, I think it was, 4 o'clock. It went all the way up over almost to $5. So, you know, if you shorted, you know, you might have got a little nervous of, you know, the following day, 4 a.m., all those gaps that we see. But it ended up being a very nice opportunity. I think that you can come to a couple conclusions here and use the looking left kind of process here again on these 340s. Same thing over here on these 270, 280s. But higher the better, and I'm just looking to fade that trend. So next section of scan is the continuation, which is sort of the long side of trades that I'm looking for. NSPR, I bought. This thing had a swipe into the close, and it held trend so far. They also had a patent after hours. So currently have a position there. I'd be looking for dips as long as it holds basically the 115 level. I'd like to see it, you know, pretty much hold trend over 120s ideally, and then, you know, potentially break out on this daily chart. It is, you know, it's not the greatest looking chart, but I would say 135 and 150 are your key levels. So, you know, 150 being that pretty much the high print there. I guess it's 148, but we'll call it 150, and then the 135 level, because that was the prior top. So once it gets into that window, you have that squeeze potential. But, you know, between the volume into the close plus the patent, you might see a little bit of nice action on Monday. So we'll see what happens with that. BGI, I have a position on this one as well. I had a swing on it, and so then I just added on dips after it was holding trend. So we'll see what happens with that. Just letting this trend work. And like I said, to kind of start the scan, momentum shifted a little bit. So, you know, there was a period of time where these charts were just kind of going straight up every single day. If momentum slows, I trim. You know, I trim around the core. If it starts to work, I add more. MREO, this one, you guys, I went over it last week as a new swing trade for me. And so I was long from last Friday. I added on Monday, and, you know, pretty much dips. And so far, I mean, it closed at the highest point on Friday. So far so good. But again, make sure you have your own plan, your own risk. You know, make sure you're doing what you think is right. I wrote why. You know, my thoughts for the medium term kind of swing. Occasionally they come across my desk, and, you know, I share them. SINO, I scooped dips on Friday. Like the chart, it's still, you know, it could just be one big fail into 1050s, 11s. But if we start to base at 11, I would be looking for a potential squeeze move. So, these are the types of setups where you've got to let them prove to you that they're going higher. You could easily look at this and say, all right, I'm buying for the breakout, buy, and then it stuffs at 11 and you're left, with the bag at 9. So I'd rather be buying higher on dips after it's proven that it is continuing to break out. It's very easy to do the opposite, anticipate that, and then end up with the bag. So always make sure that you are trading within the trend, not anticipating it in this market, because again, you just need the meat of the move. You don't need the whole thing, and a lot of times when you anticipate it, you end up on the wrong side. EBON and MOGO, those are continuation ideas. I already kind of hit upon those when I was talking about CAN, but I always look for these stocks that are consolidating and looking like they're set up for something interesting. And you saw the example that I'm giving you is CAN. I said the same thing. That doesn't mean it's going to go, but it is set up that if things take on another leg, I think that these two could outperform versus their peers. And just like you saw CAN pretty much doubled, tripled or whatever versus some of the other ones that maybe were only up 10, 20, 30%. So MOGO, same deal. And it's kind of like the laggers are now catching up. And when things have been lagging for a while, they end up having more shorts in my eyes. OBSV, I don't have a position, but great setup. So really like this setup, and I'd be watching if 480s, if it had a weak open, consolidated 480s, 490s, I'd like to kind of nibble in there and potentially start in. Again, anticipating continuation breakout of this day over here. The highs was 534. But again, I don't want to be anticipating with size in the event that it just hits it and pulls back. So I want to see continuation. I want to see 5s become base. I want to see 520s become base in order to scale into that trade. EOLS and VIOT, same deal for both of these. I think that we could be looking at some potential nice breakouts in the near term. Like I said on Friday, VIOT, I feel like it was setting up for some potential craziness. So, this is the type that I could see going, 20, 22, maybe 25. But I want to watch pullbacks. I don't want to buy breakouts. You can see breakouts got sold off. I want to be buying when nobody wants it along an overall trend. And same deal with EOLS. Nice move there, but I'd want to see basically kind of retest 1170s. If it starts to firm up over 12s, 13, so on and so forth, I would scale accordingly. Last but not least, Carve. No position, but you can see buyers in the tape, and the trend is finally breaking out towards the prior resistance levels. You can see buyer in the tape. We talk about these wicks. Gets bought up. Same deal. So we'll see what happens with these. You can clearly see that there is a big level right here, 1050s or so. So I wouldn't want to be buying into that breakout, with size, just in case it fails again, pulls back to 9. But I like dips versus 950s for now. If 1050 starts to be a nice base, I would continue to scale accordingly. Same deal with Craig type stuff. You guys know I've been long for quite a long time on this one. But if you're buying breakouts and getting excited, you're going to ruin your average and probably sell when it just has a small pullback or something like that. Have a couple other names on watch under Staying Familiar. You guys can click over to the website and check those out. There's a lot of nice breakouts. I just I don't necessarily have a perfect game plan, but NCTY, XNet, LYL was another swing trade that I have. Nice breakout so far on the daily. But after hours is down a little bit. But Riot, I want to stay familiar with all these. Tiger, just by seeing them once, you can choose whether or not you think you would trade them at some point in the near term. And the way that I do this is I go and I set price alerts based on what I see today. So if I see this and I look at it and I'm like, all right, well, I want to know if it starts to get over this 2160s, 22s. I want to know if it breaks under 1950s. Otherwise, I don't care. But that's how I would set price alerts. That way I know that it's breaking under this trend or over this trend, and then there's a potential trade. That's about it. If you guys have any questions, obviously reach out. Again, like I said earlier, I am only trying to help those that want to be helped. So, if you don't agree with what I say and when I warn on particular names, that's fine. You will learn eventually. You might continue to kill it, which is great. I hope everybody kills it. But, I just try to provide the best quality information and content based on what I see, and let the results speak for themselves, and hopefully you guys enjoy. If you guys have any questions, you know the drill. Reach out, leave a comment, your biggest key takeaway. We give away shirts, we give away IU, we give away Momo Trader's book, and we give away a week worth of food from Icon Meals all the time, and scans. We'll probably do that next week. So we've got a lot of giveaways, and all you have to do is leave your key takeaway, because like I said, sometimes I say things, it's just second nature to me, but it might be an aha moment for you. I want to know those aha moments, because that's what allows me to, help the next person. So that is about it. Make sure you like the video, and we'll see you in the room tomorrow.